Testing. Hey guys, today is Thursday with Sean and I'm in my military uniform because got nothing to do with military today, but because I just finished my reservist, so I just wanted to really share this company that I found. Very interesting company. If you can hear me and you can just say hi. It's a very interesting company that I found today. It's called the Genuine Part. So I'm genuinely in my military uniform because I just literally came home from my reservist. Okay, now this company is a very interesting company. If you have not heard of this company before, I don't blame you because I myself have not heard of this company until I did the research on the dividends aristocrats. If you are joining us for the first time, this is the series that I'm talking about, companies that have been giving dividends for the past 25 years and increasing every single year, called the dividends aristocrats. So you can really search about it or watch my previous series. I explain what is dividends aristocrats. And today I want to share with you one of the dividends aristocrats called the Genuine Parts Company, GPC. This is the ticker symbol. You can type down GPC. Now I want to share with you something interesting about this company. It was founded in 1928. Now, in 1928, right, that's many years ago, correct? Okay. Hi, Hashrat. I don't know why I'm a genius. So, anyway, in 1928, this founder, right, this guy is a genius because he actually bought he bought another company called Motor Parts Depot in Atlanta for $40,000. And you know, at that year when he bought this company, right, his name is called Carl Fraser. Okay, I can't. Cowley Fraser, I think Cowley Fraser. And when he bought this company, right, the previous person who sold him this company told him this. He said that, you know, the automobile business has reached its peak. It's not going to do well. That's why I'm selling my company. So, very sincere owner told this Cowley Fraser, say that, you know what, it is already saturated. The market has been saturated. There's no way we are going to make more money. But if you want to buy an old company that is doing okay, you can buy it. So you know what happened in the first year? GPC, which is Genuine Parts Company, so I mean he changed the name to Genuine Parts Company. In the first year it makes $75,000 in sales, which back then is quite a good result. But remember, he paid $40,000, and because of his running costs he overall lost $2,500. But that was his first year, which is 1928. Do you know what happened in 1929? 1929, right? A terrible thing happened. It is the stock market crash because of the Great Depression. That was the point in time. Imagine you just started a new company. The first year you lost money. They tell you the market is saturated, and the next year you went into the Great Depression. If it's most people, right, it will really be depressing, right? But do you know that because of the Great Depression, something interesting happened? GPC start to boom in terms of business. Why? Because GPC, they sell parts to cars, and I mean to car owners, correct? And because of the Great Depression, a lot of people cannot buy new cars, so they need to make sure that their old car is in good condition. And this business began to boom because they were repairing older vehicles rather than buying new one. And do you know what happened? So remember, in 1928 he bought the company, and in 1929 the Great Depression come. But you guess what happened? Okay, I found this information. Let me just search for it for what is very cool, because within a few years in 1930s, right, it became like almost $1 billion company. Okay, let me make sure I got the information correct. In 1930s, this is the exact number. It made 3.18 million. Remember, he just opened up the company just a few years ago, make 75,000, went into Great Depression, and within a few years in 1930s, it was 3.18 million. Very interesting company. And you guess what happened? After that, what happened, right, is World War II came. Imagine, Great Depression came, World War II came, and you are just like starting our company. But because of World War II, more people hold on to their older cars because nobody can buy new cars, and everyone is like in trouble, correct? But by its 20th anniversary, right, in 1948, started in 1928, by 1948, right, the company had $20 million in sales. $20 million, okay? Starting from 75,000 all the way to 20 million within 20 years, and they become a public listed company. And something very interesting about this company, right, is within the last, let me check the data again, within the last 90 years, there were only 5 CEOs. This, based on the studies of Fortune 500, is very, very uncommon, unusual, because most of the CEOs, they will stay lesser than 9 years. But most of these CEOs, right, because in 90 years, there's only 5 CEOs, you go and calculate, they stay probably like 40 years for some of them, or maybe like 30 years, 40 years for some of them. On average, at least more than 10 to 15 years. This shows a lot about the leadership of Genuine Part Company, GPC, again, this is what I'm talking about for today. And this actually has a very strong culture in terms of the loyalty of the CEO. Meaning to say, when it's handed over to the next CEO, they are given a lot of opportunity and chance to grow. So what happens to this company is, after years of like distributing auto parts, right, they begin to expand in different parts of America, and they begin to think, what can we do next? Because we are distributing auto parts. Now, when I read a bit furthermore, right, this shows that there's something unique about this company, because we always want to buy a company with good economic moat. This company realized they have created one very strong moat. In fact, 2 moats. The first moat is the distribution network. Okay, I mean, if you're living in Singapore, right, you may not appreciate this a lot, like distribution network. Well, I need to send something to Bedok or to Jurong. It takes me about 1 hour. But to distribute things in US, right, is not that straightforward. You need to have a really like a load of vehicles and ways to actually distribute it. So their distribution network system is so strong, they ask themselves this next question. Because we have such a strong distribution network, right, what else can we distribute? And they move on. They move on to diversify, to distribute 2 other components. So automotive is still the greatest portion. They move on, you can see, to distribute industrial parts and also business products group. So for example, 3M, Johnson & Johnson, and quite a lot of other companies, right, they get parts from the Genuine Parts Company. I mean, where else will you get it from, right? Because you want the genuine parts. So you can see that they begin to distribute this portion. Now the second more interesting thing is, right, when I read out a bit more further again, the very unique thing about this company is this: they hold a lot of inventories. Actually, you think about it, holding a lot of inventories is not something good, because what it means is, right, you need to have the cost of having a warehouse to hold your inventory. But this company, right, because they hold so much inventories, right, they can deliver parts very, very fast. If a company like Halliburton or 3M or General Electric, they say we need some parts by tomorrow, this is the only company that can actually do this. So their speed of delivery, right, became one of their economic moat. And the amount of inventory they are holding, right, is unheard of. They hold about 3.2 billion of inventory on average. Now, this may seem very, very scary, but let me share with you. As of date, right, their revenue is 16 over billion. So 3 point something billion, it is a certain portion of it. Now let's go to the financial portion, because this company, it really impressed me by their finances. If you look at their revenue, let me just highlight a few portion. In 2008, right, it was 11 billion. Can you see how steadily it grew? Okay, all the way to 16 billion. And one more thing I want you to look at it, the gross margin, meaning to say how efficient are they in producing the goods or producing the services. It's around, okay, the gross margin, right, is around 29%, but it's slowly increased to 30%. Very, very stable company. And don't forget, they're holding a lot of inventory. Look at their net income is 700 over million, and it increases to 600 over million for these past 10 years. Very stable company. Look at the earnings per share. Okay, when I was reading this company's financials, right, I feel that I found like a model answer for investing, you know. Earnings per share from 2.9 to 4.3 over these past 10 years. Dividends, as mentioned, they have increased their dividends, right, for the past 61 years. Okay, amazing company. And the dividends payout ratio, right, hovers around 50% to 60%. They are not giving everything that they have made, and they can continue to innovate and diversify into new areas. So very strong company. When I look at the cash flow, look at most of the things, the only thing that maybe if I were to like find fault on it, right, is probably the financial health, the debt to equity ratio. It is about 73% or 0.73. It is not really super high. I mean, for us, right, when we want to find a company, we want to find a company with very low debt, like maybe lesser than 50% of equity when we compare the debt to equity. This one is about 73%, slightly a bit high, but this is the only fault I can find. So very, very strong company. Do I totally understand this company? The answer is not yet, but I'm very interested to read out more about it. How they grow over the years consistently for the past almost 80 years. They have been growing consistently, very steadily, especially in times of bad times. This is very interesting phenomenon. So let's say when the stock market crash, right, people cannot afford to buy new cars. They need the services of these companies even more. This is pretty mind-blowing to me, you know. Now, the last portion I want to touch on, because it's pretty late now, so I'll cut today's segment really slightly shorter, is the valuation. This is the part that may be disappointing. The valuation is not cheap right now, but it will definitely be on my shopping list. When the depression come or the some crash come, right, I will definitely go in and accumulate this stock. Because you know that during bad times they actually do better. So the current PE ratio is 22. PE of 22 is not cheap at all. Their usual PE ratio, I look back into the past, it ranges from about 15 to around 18. So 22 is actually on a high. And their dividend yield, okay, is also not a good valuation. Okay, so this is the point I want you to take note of. Doesn't mean every single stock that we talk about right now is a good buy, but put it in your list because I'll review this stock when the stock market crash. Okay, so the dividend yield right now is only 2 point something. So based on most of the valuation methods, there's no reason to buy it now. But let me share with you what I'm going to do. I'm going to just buy a bit of it so that it stays inside my portfolio, because I want to remember this company. It's not a company that I have been looking at, because I do not even know about this company until recently. Okay, so it's genuine part company. So this is the things that I want to share tonight. I hope that it has enriched you, and thanks for staying and watching this. It's 11:05. So have a good evening and see you next Thursday.